Every so often, I'll do one of these because it is one of the largest LBOs we've seen in a very, very long time.
And a great product.
Although not a particularly rewarding price for anybody who's gotten in the stock recently, in part on reports of the talks between Citrix and Vista and Elliott. It's two buyers. The deal was announced this morning. It's $104 a share. And again, there had been some hopes that it would be far higher. It's not. Perhaps reflective of the current market for technology stocks. The multiple's lower than might have been anticipated. It's interesting from for how it's being constructed because Elliott, which is getting bigger and bigger as a player in private equity, even though the evergreen is what they call their effort there, but the funds come out of the Elliott complex, so to speak, and they report one performance number. But PE is obviously becoming a very important part of their overall strategy. Remember, they did an enormous deal where they sold Athena Healthcare last year, one of the biggest deals we'd seen, $17 billion, a big win for them, by the way, last year on that deal. This one we'll see, but they're buying Citrix along with Vista. Elliott contributing $2 billion, roughly, is what I'm hearing, in equity. Most of it is debt, of course. That's the way you set things up. In fact, as much as $17.5 billion in total debt because they're both refinancing the existing debt at Citrix, they're refinancing debt at Tibco. I'll get to that in a minute. And obviously, there is the debt financing for the purchase of the Citrix shares. Then you add in $2 billion in equity. What is Vista putting in? Tibco, a business they bought in 2014. Is what they're contributing. Now, I don't know the overall valuation for the deal. They paid $4 billion for Tibco in 2014. Obviously, it's being valued at more than that right now. So they're not putting in actual cash from a fund. They are putting in a unit that will create a very large company in the software area. By the way, Tibco, I'm told, has increased its annual recurring revenue from what had been 40% of that revenue to 90% recently. And that's the play here for Citrix as well. And Jim, you know this well. Higher multiple will be awarded to companies that obviously have a higher percentage of their revenues as recurring. And that's the hope here. They've had some missteps. They've had some execution issues on their road to this. And by the way, Elliott had been on the board, owned the stock for quite some time, sold some of it, and then bought a bunch back, let's call it mid to early last year or summer last year, and finally move ahead with this actual transaction. But they're going to lever it about 7 times EBITDA is what I'm hearing, which is not bad, but is reflective at least of taking a certain amount of risk here. So 7 years, 7 years worth of EBITDA is represented in terms of the debt being taken on. But the idea is to obviously get that EBITDA going up and have it more secure as a result of having a higher percentage of revenue be recurring for Citrix.
David, when these companies go, let's go back to Tibco. It was Vivek ran a Deva's company, owns the basketball team. You said that, of course, it increased in value. I was looking at, I want to figure out,
but I don't know how much because they're not telling me, at least. Right. We don't know where it's being valued for purposes of this transaction.
We're starting to see these companies come public again. Lifetime was a very good company, and they felt that they didn't get a good multiple. So they come public in a more bountiful multiple time, and now the multiple streaking again. I mean, do we see this?
So Vista's not taking Tibco public. Instead, they're using it in this fashion.
That's what I'm wondering.
As a way to be the equity contribution to sense.
How closed is the the equity market here?
Right now, pretty closed.
Well, that
right
can
now,
help
pretty
us.
closed.
That can help.
That can change quickly, as you know.
I know.
But right now, you're not thinking long and hard about taking a company public in this market. Certainly if it's software as a service or anything like that.
Right. But also
whereas a year ago, of course, you couldn't wait.
I mean, I was doing some work this weekend on a company, Beauty Health. Okay, this was Brent Saunders. He named new CEO last week, and they have
this was his SPAC deal.
Yes,
that he did, where they do the makeup machine
popular.
or whatever, or the facial machine.
But people think that the facial machine is real. I mean, no one thinks it's not real. But here's a company that sold at, it sold at 30, and now it's at 12. And it happened out of nowhere. It just kind of disappeared. It had there's no sponsorship.
Still above 10. It's still a winner.
In my list I did a list of SPACs this is a winner. That's what made me, I'm going back over the ones that are winners. And
take a look at the post-SPAC index that we have. It's trading at 59.
I urge people to look at these because I don't want them to get hurt.